Thank you very much. Thank you for the attendance to the conference, Sustainable Value Creation for the Long Term, the What, Why, and How, which is done in collaboration with Fundación Ceres. We have the privilege to listen to the Senior Director and Head of the CEO Investor Forum at Chief Executives for Corporate Purpose, CECP, NANDIKA MADGAVKAR. NANDIKA has held leadership roles in corporate responsibility for 15 years, focusing on strategy, reputation management, employee engagement, executive communications, and brand development. Currently, she's the Director of Strategy and Growth at the executive sponsor of the Center for Sustainable Business Excellence, CECP. CECP was created in 1999 by Paul Newman and a group of business leaders in the United States with the goal of empowering companies to increase their impact and generate long-term sustainable value. Today, it is a movement with more than 200 US-based companies representing $7.7 trillion and more than 21 trillion in assets under management. Like Ceres, it is an organization convinced that a company's success depends on aligning its strategy with society. Please welcome and I'll give the floor to Nandika. Thank you very much.
Thank you. Buenos dias. I hope I got that right. Thank you for being with me today. This is indeed an honor and a privilege. Thank you to Fundación Ceres and Spain Investor Day for this very thoughtful discussion that I think is critically important in today's world. Especially, we heard that the recession is not going to be as bad as we thought it was. But it still is a difficult time for companies as they navigate what is going to be a somewhat uncertain times in the few years ahead. My introduction to CECP was already given, so I'm going to skip over that. But I will say that, like Fundación, CECP believes that the capital markets have the leverage to do good while doing well. So with that, I'd like to start us off with a couple of questions. And if you will go to, and I cannot see my slide here. If you would go to this, take your cameras out and just take a picture of the QR code or go to the website and put in the code there. The question that I would like to ask, the first one is, how equipped do you feel to meet the expectations in the current business and socio-political environment? This is a quick gut check question, so don't spend a whole lot of time in answering it, but let's start with that. And once I see the numbers coming up, great, very good, much better than the US, I think the sentiment in Spain. The next question I had was, the next question, if we can go to the next slide, could the folks at the back move us to the next slide? It is, what are the top three business challenges? And it was a multiple choice question there as well. Technology, we love it and we hate it at the same time. Okay, so here we go. Please select the top 3 business challenges that are most relevant to your company. And let us see what comes in. Very quick, gut reaction. All right. So 33% leading with employee, okay, what? Let's see, navigating responsible, preparing for the future of work. So very similar to the sentiments we had. We asked these questions of our CEOs most recently in November, and interestingly, with the previous question, the biggest challenge that our CEOs actually talked about was preparing for the future of work. It seems to be somewhat more evenly distributed here, but It is, 68% of our CEOs said that preparing for the future of work was one of the biggest challenges that they are facing. So with that, we'll go back to the presentation. And we did talk about the CEO Investor Forum, and I will say an interesting story about how it got founded, because CECP itself, while 25 years old, was very focused on corporate responsibility and philanthropy. But it was about 4 years ago when we were at our CEO closed-door meeting that the chairwoman and CEO of CalPERS, one of the largest US pension funds, looked around the room and pointed to all the CEOs and said, I own each one of you and you're all too short-term focused. So you can imagine, like, the room was in a furor because the CEOs turned around and said, well, the markets and the investors are too short-term focused, so how do you expect us to focus on sustainable value creation if we are constantly meeting market demands? So that event led to the founding of the CEO Investor Forum, which is co-chaired by the former CEO and chairman of Vanguard, Bill McNabb, and the former chairman and CEO of Johnson & Johnson, Alex Gorski. And I just have the honor of leading this network, wherein we help companies share their sustainable value journey with institutional investors, while we also oversee a robust body of research that continuously lets us help refine the framework that we've used with our CEOs to meet market demands. So as we know, the world changes very rapidly, especially the world of ESG. And one of the things that we've done at CECP is created a sustainable business advisory board with issuers, institutional investors, and professional services firms. And we have organizations like Vanguard, BlackRock, and State Street, as well as professional services firms like KPMG, EY, and PwC, and big companies like Walmart, BD, and a number of others who kind of guide us as we think about refining the framework we use with our companies. So what is this guidance? And this is this research is going to be available to you, and the presentation will be available through Fundación after the event. But one of the main things that we have found with our research, which is investor informed, is that it enables companies and CEOs to develop and communicate an effective long-term strategic plan that informs investment, voting, and engagement decisions. So what does that mean? What do we mean when we talk about a long-term plan? A long-term plan, based on sort of our research and conversations with institutional investors, is when a corporation sets out key elements of its long-term strategy over a 3 to 7 year time horizon. So while we appreciate the fact that companies are updating us on an annual and also quarterly basis on their earnings, we found, at least in the US, that it is increasingly important to investors to know what the long-term strategy and the sustainable business value that the company is producing over the long term. Today, business leaders face a lot of pressure to increase their organization's resilience while simultaneously addressing ESG issues, which are important to stakeholders, not just investors. Increasingly, at least in the US, we have found that employees are one of your most important stakeholders in how a business conducts and how a business builds its brand and reputation, retention, and recruitment. The CEO Investor Forum's advisory practice helps companies identify and navigate the business opportunities and risks material to their industries. We focus on supporting our CEOs with effectively communicating their forward-looking sustainable value creation strategies to investors and other key stakeholders. So we interviewed our CEOs, and we do this constantly just to keep abreast of what is top of mind for them. And the key motivations that the CEOs have identified has been a frustration about an overly short-term focus on the earnings call, the need to provide a coherent narrative around an expanded disclosure ecosystem. In Europe, of course, regulation and disclosures are par for the course, but in the US, we Still, we lag way behind Europe, but as we've heard most recently, that the SEC is coming in with regulation both around climate disclosure and human capital management. And so companies are now beginning to invest a lot more in staffing around reporting. Actually, I think there was a recent Deloitte survey that said 99% of US companies have increased their investment in staff and technology to help with reporting. So we focus on supporting CEOs with, so one of the other reasons that the CEOs provided was the desire to reinforce their industry leadership by sharing their long-term vision, the motivation to increase long-term shareholder in their investor base, and to prepare their organization to engage with activist investors. I'm not sure if you've heard of Engine One in Europe, but they are a big activist investors in the US, and they were recently responsible for moving the CEO of Danone out of his position because of certain stands that Danone had taken. And so one of the big things in the US that our companies have been focused on is how can they be sharing and communicating their long-term strategies so investors do not take them to the cleaners, let's just say. So 8 reasons actually why companies should think about creating a long-term strategy. This is to demonstrate that there is an effective long-term strategy, which most companies do have. It's just that we don't communicate it often enough. To show that the company can anticipate and capitalize on mega trends. To help investors understand ESG issues through the eyes of management. This has been a big one in the US. Enable the C-suite to reflect on the corporate ecosystem, including a consideration of its stakeholders. To help inspire and retain employees and investors over the long term. To foster leadership in long-term focused disclosures. To cultivate a long-term investor base, and to create a favorable context for companies to execute short-term actions in the effort to achieve long-term objectives. And I think when further along, we'll talk about the fact that it is really important when we talk about corporate purpose, that not only do the employees buy into that, but it is something that the board of directors at a company also signs on to, because it does allow the C-suite and senior executives to take short-term actions that might be detrimental to the company's bottom line, but in the end achieve their long-term goals. So at CCP, we sort of kind of came across like, when should you be delivering a long-term plan? And we believe that all listed companies should be subject to an annual review and a periodic refreshment of their long-term plan. And while we understand that by its very nature, the long-term plan has an expanded time horizon, we also understand that market conditions and ad hoc events can have an impact, both negative and positive, on business strategies. So we encourage our companies to annually update those sections of their long-term plan, a strategy that might have been impacted outside of the 3 to 5, 7-year cycle. Some key triggers that might cause a company to update their long-term plan would be CEO transition, transformational M&A activity, outcome of an activist defense, and also, of course, any kind of public scandal that might impact the company's brand and reputation. When we talk about what makes a successful long-term plan, there are certain disclosure principles which we highly encourage our companies to include in their presentations. These are building on existing disclosures, so it's an additive. It's not your regular IR deck. It contextualizes and gives a little bit more color to the disclosures, expectations, and targets that a company sets in their strategy. It also looks at financially material topics that is relevant to that industry and business model. It looks at how ESG issues and sustainability is integrated throughout the business strategy. So it's not just talking about ESG as a topic, which is a part of your overall business strategy, but it's ESG that is built throughout your business practice. And of course, for us at CCP, the most important thing is the forward-looking disclosure. We believe that this is, while looking back and reporting on backward-looking data is good because it gives you a baseline, but really from an institutional investor perspective, it's what are you doing that is going to impact the future of the business that is really important in terms of investment decisions. And of course, the long-term plan must provide a connection to financial prospects and operational performance over the 3 to 5 years that they have set out their strategies. It's interesting though, CCP has been around for about 25 years, but it was only about 4 years ago that we really started focusing on the capital markets. And there's nothing like a crisis to make you do that, right? So we had the 2008 crisis, and then of course we had COVID, and in the US, of course, we had George Floyd's murder, which caused a lot of companies to sort of sit up and take notice of the S in ESG. So the social impact of what a company does, how does it speak up? What does it do for its employees? What is it doing around diversity, equity, and inclusion became increasingly important. And so while we are fairly new to the capital markets and engaging our companies around what institutional investors are looking for, we have developed a process over time, which we use to guide our companies in helping them build their long-term plan and also in sharing it. So one of the key factors, or maybe 3 or 4 key factors that we found in supporting our companies, and to date about 50 CEOs have shared their long-term plans, has been that it has led to cross-team collaboration within a company. In the US, invariably, the way the company structure is set up, you have finance, you have legal, you have HR, you have sustainability, you have corporate responsibility, all sitting within different sections of the company, but very rarely do they all speak to each other. One of the key factors and one of the key outcomes of the long-term plan presentation has been the breaking down of silos within an organization. So that cross-team collaboration has been extremely useful. Also, there has been a development of a shared and holistic understanding of materiality. And that has been critically important because while many companies do a materiality analysis, it is very often not shared with the CFO. It's not shared with legal. And so that understanding of what does materiality look like for a company has been one of the key outcomes of this process. And also sort of building beyond that default IR deck, right? It's just like, how can we really tell the story of what this company is trying to achieve? One of the so sort of internally, kind of like that's how what we've seen has been the outcome. Externally, the process that we've put into place is a lot of outreach to CEOs. CECP is a CEO-led coalition. So we reach out to our CEOs, both affiliated companies and prospect companies. So this is the one event at CECP that is open to the public. We invite them to share their business strategy. We guide them on the presentation. We provide them with the framework and the template that I'm going to talk to you about in a minute. And then we host them at our event where we invite institutional investors, academics, NGOs, rating and ranking organizations. And we collect the feedback from these organizations that we then give back to the company, and we assess them using our long-term disclosure assessment tool. This is a proprietary tool that we've developed. And we work with an organization called KKS in the US. Professor George Seraphim of the Harvard Business School was the founder of this organization, and they do a lot of the scoring for us, for our companies. We are not a rating and ranking organization, but these scores do help our companies to better understand where the gaps are and how they can do better in the future. So the value of delivering a long-term plan. Now, I will caveat this by saying that when we studied the capital markets reaction to the inaugural set of 17 CEOs who presented their long-term plan to our institutional investors, we did find that although the sell-side analysts were unresponsive generally to these plans, both the trading volume and the stock prices exhibited abnormal reactions to the presentations, providing suggestive evidence that the communication of such plans conveys value-relevant information to investors with longer-term time horizons. And although this was a very small sample, and we've added an additional 10 companies to these findings help shed a light on the promise of long-term plans and have been corroborated by analysis of the market response. The other value to this was that the more specific and forward-looking the information disclosure is in these long-term plans, the more positive is the capital market reaction to the company's presentation. And finally, it acts as a force function leading to greater cross-collaboration within a company. As one CEO recently told us, who was going to be presenting at our Reg FD platform, and he told us that the best thing he ever did was to do this long-term plan presentation because he could lock legal, finance, HR, corporate responsibility, sustainability in a room. And he said, I'm not going to let you out until you come up with a holistic way of how we're going to be communicating our strategic value to our key stakeholders. And according to him, they did just that. And it has led to a better understanding across the company about issues that are important to them, not just from an investor perspective, but looking at all their key stakeholders, consumers, employees, supply chain, you know, all vendors. And so I think that has been one of the key benefits of the framework. So I want to spend a little bit of time talking to you about our long-term plan framework. As I mentioned, it's investor-informed. It's largely based on SASB, even though we are standard agnostic. We don't care where your data comes from or your metrics come from. But because it is, because we started out with looking at the investor landscape, our default was to go to SASB. So we did a big listening tour, as I said, you know, at the beginning, with issuers, institutional investors, and professional services firms. And our work led us to come up with these 9 themes and 23 issues. Now, I will say, over the last, 50 presentations, how, you know, every company does it a little differently. Not all of them do it as well as we would like them to, and not all of them have those forward-looking disclosures. But I will say that our safe harbor language that is at the beginning of every presentation, and it's at the beginning of every company's regular presentation, gives the companies some protection against perhaps not meeting the goals that they set out to do. But also, we've heard from investors that they don't really care if you meet or don't meet those goals, as long as there is transparency on how you're going to get there, right? And I'm talking about institutional investors, not the short-term investors. So foundational to this guidance is embedding of ESG issues throughout the business practice and strategy. And the 9 themes that we identified was corporate, most importantly for us, corporate purpose. We are chief executives for corporate purpose, so not surprising that that is close to our heart. And basically what we mean by that is, does a company have corporate purpose that is aligned with its business strategy? Is it operationalized within the organization? Do the employees live that purpose in their day-to-day work? And then taking it one step further, is the board of directors signed on to the statement of corporate purpose, thereby indicating their support for and commitment to the C-suite, which would allow senior executives to make potentially difficult short-term decisions to build on their long-term strategy. The second theme is competitive strategic positioning. We encourage our companies to describe the key value drivers for the firm and the priority initiatives, including ESG factors. It is important to note the measurement system for each priority. So for example, If you're describing climate change using TCFD as an example, as one of the standards that are out there, and using that as a measurement and talking about that. So a lot of this is also, we have found in our work, a lot of it is about educating C-suite on what is ESG, what are these different standards, and because, you know, invariably what we find is there is a certain lack of understanding about how important this can actually be for the business. We also always encourage the presentation to tie back to trends, risks, and opportunities. And when we talk about trends, we ask management to highlight the major trends that broadly impact planet, people, and business operations. And we ask them to describe the methods or plans for reporting on key trends to investors. Corporate governance is another one where we encourage companies to describe at a very high level the relationship of executive compensation to the long-term strategy. This has become a big issue in the US particularly, and also to explain whether material ESG metrics are incorporated into compensation arrangements. One of our affiliated members, MasterCard, most recently announced that at the senior levels and actually down amongst its employees as well, that they are correlating ESG into the compensation model. So companies are starting to take some steps in this direction. We also encourage our companies to set out financially material ESG issues, describing how financially material risks are managed and overseen, and also to elaborate on how financially material opportunities are seized. Human capital management has become a really big issue area, especially in the US. And we ask our companies to outline key initiatives and metrics as it relates to their business model and industry, and also to provide projections on the likely impact on financial performance. Traditionally in the US, when you look at corporate responsibility reports or sustainability reports, you will see that there is a very little data that companies report out on when it comes to human capital management. So what does diversity look like amongst within the corporation at the board level or at the senior executive level? What is the gender pay gap look like? This data is generally not disclosed, and one of our roles, and I think one of the key roles we play, is to encourage companies to do more of that transparent reporting. We also look at innovation and operational ecosystems. This is basically, you know, asking companies to give a commentary on how they're managing innovation and new technology, both internally and through partnerships. And this is kind of where we find that companies generally tend to focus on their key strategic partnerships aligned with delivering their long-term strategy. So providing examples of how such partnerships impact the operational ecosystem. You know, how do you access specific products? What does your supply chain look like? Who are you partnering with to assess and audit your supply chain? And the work that's going on. So that part of it is really important, and most of our companies do stress and spend a lot of time on talking about their strategic partnerships. We have financial performance, and this is again sharing forward-looking strategic and financial metrics relevant to the long-term strategy. Key performance indicators are related to a wide range of relevant financial metrics and time horizons. And we also ask them to outline how leveraged the company will be in the years ahead, sort of set the stage and explain the trajectory of financial performance. Describe how your long-term strategy is tracked in short-term reporting. For example, one of the research reports we put out describes how CEOs can actually open their quarterly calls by talking about some of their ESG updates, right? Like, so it doesn't have to be the whole thing, but has there been a significant movement in any of the sustainable strategies that they've put into place that they can talk about? And that's also a way of encouraging investors to think a little differently about how they approach these ESG, these earnings calls. And we also sort of encourage them to, and if they don't provide sort of this long-term financial guidance, we ask them to explain why, because sometimes, there are internal business probably key issues that are happening at that moment that they cannot be as transparent as they would like to be. But it is important to explain why, if they don't have a long-term strategy and they're not talking about it, why they don't talk about it. And then, of course, there's the capital allocation piece, which is, again, describing how capital is going to be allocated over the long term, and then tying it back to trends, risks, and opportunities. So with that, if we have time, do we have time to go into a couple of examples? Or are we at time? 2 minutes? Okay, well then, I will not go into the examples because we have many, but this presentation will be available to you in a more expanded form through Fundación series. And I want to say thank you for giving me your time. Gracias, and have a good day. Thank you.